Good afternoon, and thank you for joining Kamco Invest's online investors meeting. I'm Mustafa Zantout, Director of Marketing and Investor Relations, and joining with me in the meeting today are Faisal Sarkoot, Chief Executive Officer, Hana Taha, Chief Financial Officer. Our agenda for today will cover a brief introduction on the company, an overview on the events that happened in the first half of the year. Then we move into the company's business and financial performance. And finally, we will close with a Q&A session. Should you have questions to raise, please share them at any time using the Q&A icon, similar to the one available on the screen, and we will be more than happy to answer them at the end. I would like to inform you that the presentation is available under the Investor Relations section on our website, kamcoinvest.com. Kamco Invest is a regional non-banking financial powerhouse. It's an independently managed subsidiary of Kamco Group, headquartered in Kuwait with offices in Saudi, UAE, and a rep office in Turkey. The company is licensed by the Capital Markets Authority of Kuwait and Central Bank, in addition to being listed on Bursa Kuwait. Our main business offerings focuses on three business sectors: asset management, which focuses on fund management, portfolio management, and advisory services, covering various asset classes and jurisdictions. Second is investment banking, covering the three main areas of investment banking. We're talking about equity capital markets, debt capital markets, as well as mergers and acquisition. In addition to brokerage, which is part of our subsidiary, Ula Wasata. Today, we manage around $12.4 billion, which makes us the fifth largest asset manager in the region. And in terms of investment banking, we've played the role of investment banker for several mandates since the establishment of the company, that's worth $23 billion US. The company is well positioned to serve its clients. It enjoys a good placement power through our wealth management team of professionals. We have regional footprints, whether we're talking about regional offices or the clients we serve in the region. Comprehensive offerings through the various business sectors that we've discussed, supported by insight through research department. We have built during the past years an excellent track record, have an experienced professional team, and we follow a very client-driven approach with our clients. If we look quickly at what happened during the past 6 months, the world has witnessed COVID-19, which is unprecedented pandemic, disrupting government entities, the private sector, and economies around the world. That started somewhere around March 2020. Governments have taken measures to prevent the spread of this pandemic. If we look at Kuwait, comparing this 6 months with the 6 months of last year we had 119 normal working days. This year it was only 46. If we look at the time from March, we had in February the first confirmed COVID-19 case. In March, it was the beginning of the closure period. In May, we moved into phase 1 of the returning to normal. And then on 30th of June, we moved into the second phase, which allows only up to 30% of employees to be available in offices. But during that time, since 12th of March till end of June, we went through different stages, being it closure, partial lockdown, or total lockdown. And at all times, all borders were closed, which have negatively affected all businesses in Kuwait. On another hand, if we look at the oil prices, OPEC production has been the lowest since June 1991. It stands at 22.6 million barrels per day. If we look at the performance of the oil market, Q1 it went down to $65.5. During that time, it went below $10 per barrel. In Q2, it went up by 81%, but closed the 6-month period by down 37.7%. If we look at the capital markets, we see that worldwide, all capital markets were highly affected during the first quarter. If we look at the MSCI World, it was down 21.7% during Q1. recovered during Q2 by reporting 18.7%, but closed the 6-month down like 7%. If we zoom into the GCC, again, it's the same similar scenario. Q1 was down 24.6, up 10.8 in the second quarter, but closed the 6-month at minus 16.4. Kuwait was at par with the MSCI GCC to an extent. The first quarter was negative 23%, a drop of 23%. It was up in the second quarter by 6.4%, but the 6-month period was down 18.3%. We'll move now to the business and financial performance with Boubader. Boubader, please.
Yeah. Good afternoon, everyone. Thank you for attending our session, and thank you, Mustafa, for the overview in the beginning. Now, there's going to be a few slides that I will cover, but I'd like to start off with talking a little bit about the strategy, the immediate strategy given the situation. So, as was highlighted with the beginning of the pandemic, a lot of studies and measures were taken by the government, regulators, and these have impacted business continuity. So our strategy to operate during this difficult 6-month period was, you can look at the 4 pillars that we highlight in this slide. So the first pillar was really to focus on the employees, which is a focus on the most important asset of the organization. Here we're talking about maintenance of health, safety, and measures around that. Safeguarding interests of all stakeholders, which is very important. So our stakeholders are a priority for the business and for us, and we are focused on how we can safeguard their interests in the business, be it employees, be it shareholders, be it creditors, suppliers, clients, of course. Now, the readiness and preparedness for getting to full activity is another measure that we've been focused on, how we strategically go through this phase and move on to the next one. In addition, for us, of course, it's a difficult time for our society, our employees, part of our stakeholder responsibilities, as well as our commitment to social responsibility and the CSR side, and where we can provide much needed support within our activities as a company and as individuals. Now, on this slide, I'd just like to talk a little bit about what was done during the 6 months, what we call key accomplishments. We're very pleased to say that during the 6 months, we were able to provide interruption-free services in achieving several business accomplishments. A key accomplishment we did was attracting investments from clients, over $60 million into transactions that we have. We've distributed as well $31 million to our clients. So clients invested with us above 60, and we've distributed to them $31 million in terms of capital distributions and income distributions during this period. Now, our equity funds performance continues to be stellar, outperforming respective benchmarks. 3 of our funds are recognized by the highly reputable Refinitiv Lipper Fund Awards of 2020. So 3 of our funds received that award. During this period, of course, we acquired an income-generating property in the US, which gives us a total managed real estate value portfolio of over $1.2 billion. We also, during the period, exited a managed US property, which generated 22.8% return to our clients. Of course, we continue our business on other sides, be it launching strategic initiatives, continuing negotiations on some of our products and some of our transactionary side. In particular, during the first period before the lockdown started happening, we had a very active investment banking space activity. There we were joint lead managers for 3 DCM debt capital market transactions. Total of $1.3 billion was raised for those transactions. Of course, we were a lead JLM on that. 2 of those offerings were regional in US dollars, and 1 of them was for a local bank in KD. Our brokerage arm Ula Wasata continued during the period without interruption to provide its services to the clients, in addition to increasing the market share and attracting new clients through the online trading platform, which continues to develop as we speak. Now, looking, this is a look at the assets under management, or the client assets under management since 1998. So if you look at our trajectory of growth, you can see it in general growing at a very healthy compounded annual growth rate of 12.6% since inception. So we've had double-digit growth over a period of 20 years, more than 20 years now, in our AUM. As it stands today, and as was mentioned by my colleague Mustafa, in September of last year, Moody's report ranked us number 5 in the region in terms of size, largest asset manager in the region. Today, as of 30th of June, we manage 3.8 billion Kuwaiti dinars, equivalent of $12.4 billion US dollars. Keeping in mind that during this tough 6-month period, AUM in general valuation has dropped by 7% over the period of December to June 2020. Okay, just to reiterate a little bit the 3 pillars for ensuring a seamless workflow during the pandemic. We mentioned the human side, maintaining good health, encouraging, prioritizing personal family health, adhering to all the different authority, continuous authority and regulator output that comes, that guidance points and requirements that are coming. We remained fully operational, and certain of our employees were coming to the premises as per the requirements from time to time and as a needed basis and rotation basis. From the technical side, of course, our systems, tools, software, licenses all remained active and available. We were able to have appropriate remote access to the resources provided where required, while maintaining confidentiality of our stakeholder information. In addition, this period saw us also expedite, and this was part of our plan, to have a stronger digitization drive, but this was even expedited further with the onset of the pandemic, and this is a key post-merger strategic pillar for us. From the financial resources side, and we'll get into more details there, but having sufficient liquidity, maintaining operations as usual very comfortably, continuing to generate fee income from core activities, in addition to reviewing every single item of expenditure, rationalizing, preserving financial resources during a very difficult period that we were in and we're still in. If we look at the financial impact of the pandemic, and this is taken from what was sent to the Borsa Kuwait as a disclosure. If I was to look at the ones with the impact, of course, financial assets at fair value and through profit and loss, and financial assets at fair value through other comprehensive income, both had losses, and primarily these are unrealized losses due to the situation and the onset of the situation. The same impact also was on investment in associates there. Other assets, basically a provision that was taken, it's not that sizable. From an overall financial position, the reduction in the equity attributable to equity holders by around 6 million KD. So if you look at the revenue side, realized, part realized, but mostly unrealized losses of 6 million KD. In addition, of course, there was a slowing down of the business because of the closures and the pandemic effect, which had a reduction impact on the fee income. In terms of expenditures, where we had extra expenditures, was related to the pandemic of around 100+ thousand Kuwaiti dinars. I don't know if you want to add anything on this slide, Hannah?
No, that's fine. I think we cover all the major loss and impact for COVID-19 for our 6-month results.
Yeah. And then the Q&A, of course, will answer any specific questions on this.
Exactly.
So, okay, on slide, this slide 12, where we talk about the income statement side, Of course, there was a severe drop because of the unrealized losses in our total income in the 6 months. That was a 66%, circa 66% reduction. We had a positive start, and this is part of post-merger growth, a positive start to the year where our fee income increased by 16.2% in Q1 before the pandemic really started impacting us. Now, the slowness that happened in the second quarter in different ways has affected the fee income, and we had a 4.7% drop in that level. Of course, keep in mind that the first quarter, you had the biggest impact towards the end of the first quarter for the unrealized side. That, of course, changed a little bit in the second quarter, but the slowness of the business had an impact, which resulted in fee income and, in essence, total income dropping to the levels we see in our audited and published financial statements. Now, from the expenses side in the income statement, if we look at our G&A expenses, that dropped by 32% during the 6 months, 18.7 in Q1 and 48.4 Q2. The G&A expense, and this is an important measure that we'd like to highlight as well, that our G&A expense to fee income dropped from 1.14 times in the 6 months of 2019 to 0.81 times in the 6 months 2020. The 6 month net losses was affected, of course, by the financial markets performance, with the Q1 losses of 4.6 in total and a profit of 700,000.7 million in Q2 from the profitability side. Looking at our assets and liability side, first starting with the assets, total assets increased by 14.2% since the onset of the year. Cash and cash equivalents represent 32% of our total assets, and that's total number in KDs. What we have in cash and cash equivalent, total consolidated basis is 46.7 million Kuwaiti dinars. And when you look at the composition of those assets, you see that the cash and cash as a single item is the largest in our total assets. Then you have our investments, total of 43.2% versus 48.3% in the beginning of the year. So I don't know if you have any questions that you'll raise later on this. It's highlighting that. The liability side, of course, it's important to note that, with the onset of the crisis and our AGM coming up, the decision was to continue with our dividend payment. Some companies in the market either reduced their dividend payment or cancelled it altogether. For us, we believe that that is an important pillar, and the board and the shareholders, of course, believe that that's important pillar to be distributing, and we distributed the dividends, which was done for the full year 2019. Today, as of end of June, our owner's equity stands at 48.5 million. If you look at the owner's equity to total assets, that's 32.8 versus 43.6 as of the end of last year. Our net debt to equity here being 0.63 times versus, of course, 0.33 times at end of last year. During the year, and in June in particular, our rating, our credit rating by Capital Intelligence was affirmed at BBB long-term, A3 short-term, with a stable outlook, which is a positive indicator for us. So I think now we start the Q&A session. Mustafa?
Okay. Thank you, Boubacar. We have two questions now, which we've received. One is, do you believe the merger with the Global Investment House was a burden during these times?
I think the opposite. When you hear in the market, whether in the international markets, regional, local markets, they talk about consolidation of businesses and businesses being stronger when they combine. And I think the Kamco Global merger, which today is Kamco Invest, as of December 12th, is showing that. Now, if it wasn't for the COVID impact, we would have seen what we would have seen is a consolidation of how the revenue is there while reductions in expenses. So when you look at what has happened in the financial side, on the expenses side, you see a significant reduction in expenses in the June period. This is not all driven by COVID impact, but a big part of it is planned post-merger reduction in expenses. And this ties along very well with the benefits that consolidated businesses gain from doing their best at the economies of scale. In our case, what has happened is that we have maintained the client base of the two organizations into one. We've actually grown that client base, of course, impacted by the reduction in the market and the negative market impact from COVID. However, we have been able to consolidate our clients, revamp our platform, and do a great job on that. On the expenses side, I think the numbers will show significant reduction in expenses, a big part of which was planned. So in essence, to answer the question, it was not a burden. It was a good decision and good result in my opinion. Today, the combined company has a wider footprint, a more comprehensive offering, a stronger financial ability to move forward and grow. And those are all benefits that we see from that successful merger.
Okay, got another question mainly on the expenses and the drivers of lowering these expenses. Is the drop in expenses due to realization of global Kamco merger synergies or an impact of shutdown due to COVID? I'm not sure if Hana could take this question.
Yes, about 3.2 million cost reduction in the general and admin. Most of it, actually 2 million reduction for the staff cost synergy realization. After the merge of Global and Kamco, there was some redundant positions, and it leads to the saving of the 2 million. Plus the other 1.2 million, most of it, 1 million of it, it is professional fees saving also. And this, it was part of the integration due 6 months of 2019. The rest of the 200,000, because of the pandemic and the COVID-19, company reduced some expenses like, so of course, business trip, training, miscellaneous, administration, communication. Most of the expenses we reduced about almost 200,000 KT. This is the part of the expenses. Of course, we postponed all the new hires for staff also.
Mustafa, I think you're on mute, maybe.
Mustafa.
Another question is, please advise what transactions contributed to significant placement structured transaction fee income. Are they related to US transactions? Why there is no such income in second quarter?
Sorry. The end of your question, what?
Why there's no such income in second quarter? Why the fees have dropped in the second quarter?
Because we lost the incentive. Actually, the major fee, the major one-off incentive, it was a structure fee from real estate transaction, about almost 1.2 million KD. And in the first quarter, we got about 700,000 incentive also, one time, from special situation. But it is not repeated in Q2.
Well, you have to keep in mind as well, to answer the question also in addition, is that during the second quarter, a lot of closures were there. We had a number of transactions that were either postponed or delayed. Today, the capital markets, be it, if you're IPOing a business or you're doing a DCM money raise transaction, these have all been either postponed or delayed because of the COVID. So the activity was really not just for us, I think the entire market was impacted heavily.
Also, I can add here, even the management fees, the normal management fees, it's reduced because the size of the fund reduced by the decline in the market.
Okay, that's it for the Q&A. Thank you all shareholders, analysts, and bondholders. I think here we come to an end of our event today. Again, just to remind you that the presentation is available on our website, kamcoinvest.com, under the Investor Relations section. Thank you.
Thank you.
Thank you.